Hey everyone, welcome back to Corporate Decoder. Today, we're diving into a company filing that's a bit like a hospital bill after a long stay. Complex, a little scary, and definitely something you want to understand. We're decoding TruBridge's latest annual report, and let's just say it's got some twists and turns. TruBridge, formerly known as Computer Programs and Systems Inc., helps community hospitals and healthcare systems manage their finances and patient care. They offer software and services aiming to improve efficiency and ultimately patient outcomes. Think of them as the behind-the-scenes number crunchers and tech helpers for smaller hospitals. They operate in two main areas. First, financial health, which is all about helping hospitals manage their revenue, billing, and IT. Second, patient care, focused on electronic health records and patient engagement. It's like having a financial doctor and a tech-savvy nurse all in one place for these hospitals. The healthcare industry is huge, trillions of dollars, but it's also facing rising costs and pressure to improve care. Community hospitals, TruBridge's target, are particularly feeling the squeeze because they rely heavily on Medicare and Medicaid. This creates both challenges and opportunities for TruBridge. They need to help these hospitals become more efficient while also navigating tricky regulations. Their strategy: grow the financial health business, keep their existing patient care customers happy, and become leaders in patient engagement solutions. They want to sell more of their financial services to existing customers and attract new ones, while also staying competitive in the tech they offer. It's a balancing act of growth and efficiency. One key strategy of margin optimization is about cutting costs to become more efficient, standardizing workflows, automating things, and even using resources from other countries where labor is cheaper. This allows them to invest in future growth. If they can be smarter with their spending, it allows flexibility on product pricing. They're also exploring artificial intelligence to help their clients, but being careful to use it responsibly. AI is the new frontier, and TruBridge recognizes the importance of not being left behind. So what exactly do they sell? On the financial health side, they have software to manage claims, track payments, and analyze contracts, plus consulting and IT services. The goal is to streamline billing, reduce errors, and get hospitals paid faster. For patient care, they offer electronic health record systems that help hospitals manage patient data, streamline workflows, and improve care. These systems handle everything from patient registration to lab results to medication orders. It's all about going paperless and making information easily accessible. Backlog is basically the amount of business they expect to do over the next year. They're reporting a backlog of about $8 million for system sales, like a new business, and $328 million for recurring services. This is similar to the previous year, signaling relative stability. Competition is fierce as they're up against big players with deep pockets. The main ways they compete is through perceived security, results of their products, how well they integrate with other software, and of course, reputation. Because they handle sensitive patient data, they're heavily regulated by laws like HIPAA and HICHAIC. Keeping data safe and complying with these rules is critical, and any slip-ups could lead to big fines and a damaged reputation. As of the end of last year, they had over 3,200 employees with a growing global workforce in India. Finding and keeping qualified people in a competitive market is a challenge. They focus on being inclusive and empowering employees. Their business is affected by tons of government regulations, which are always changing and are difficult to adapt to as a company. They have been impacted and are affected by laws and regulations like e-prescribing, CMS, and anti-kickback statutes. There was a shift in leadership with Christopher Fowler as CEO and Vinay Bassi as CFO. Keeping an eye on these changes can offer insights on strategy shifts and stability. Alright, let's dive into the numbers. Looking at their results, we can see a breakdown by their two segments. What is interesting here is looking at financial health revenues compared to patient care revenues. They are doing $21.17 million compared to $124 million, representing the shifting strategy of the company. Now let's look at some of the biggest risks of owning TruBridge, with AI being one of them. Companies and customers could suffer, be harmed, face liability, and other problems due to errors in the data that the AI has. It could make a company less competitive, which is why it is important to monitor this risk, which can be seen on page 29. There are risks around recurring revenue, which includes how they transition. They're shifting to a subscription model, which can create uncertainty in the short term as their existing relationships transition, which also impacts their product offerings, and that shift can result in a decline in their revenue and cash flows in future periods. The market for financial health services might not grow as quickly as they hope. Some hospitals may not want to outsource these services or may already have their own solutions. If they can't manage their growth in new markets, it can create some additional risks. They might get sued or investigated, which can be costly and distract management. Using offshore labor also brings risks, as it can be tough to keep up with all the local laws and regulations. Their products, like all software, could have errors or security breaches, which could lead to lawsuits and reputational damage. This is always something to keep an eye on in the tech world. It is important for the company to maintain profits, as a failure to do so can significantly affect the business. It is important that the company properly accounts for their expenses. Their debt situation could affect their ability to operate, invest, and respond to changes. Big debt can limit flexibility and make them vulnerable to economic downturns. It is always important to monitor what the company's debt looks like. They've had some past issues with internal controls, which could lead to inaccurate financial reporting. They are located in an area vulnerable to hurricanes, which can cause significant damage. They could be forced to cease or limit their operations. The company has a very low amount of cash and cash equivalents, only 12.3 M as of December 31st, 2024. They have to consider this and work to change it to ensure they can operate their business as anticipated. Let's look at the segment data in more detail. Breaking down revenue, financial health is growing while patient care is shrinking. This highlights the shift in the company's focus. In the adjusted EBITDA segment, a metric that disregards the cost of expenses to make it seem like they are performing well, financial health is increasing and patient care is decreasing. This could mean higher profits and the need to make changes, and also aligns with their strategic shift to focus on financial health as a growth driver. Alright, let's step back and ask, what does this all really mean? TruBridge is definitely undergoing a transformation. They have to focus on the things that they have going for them. The company has a strong customer base and good opportunities in cross-selling services. The company also has potential for growth with value-based service. But there are weaknesses, of course, as with any company. The debt is a major problem. The company needs to figure out some way to reduce it and clean up some of their processes' internal controls that may limit them to have strong, reliable reporting. All in all, the biggest threat comes from outside in the form of regulations. There are many regulations that have direct impact on their clients' business. These results are definitely something to keep an eye on. Thanks for watching. If you enjoyed, please subscribe, like, and comment, and we will be happy to bring you more of this content.